Let's get one thing straight. The Federal Reserve doesn't care who's in the White House. Not Trump, not Biden, not anyone. And that's not an accident, it's by design. On June 18th, the Fed made a decision that caught a lot of attention, not just because of what they did, but because of what they didn't do. They chose not to cut interest rates, again. And guess who wasn't happy about that? Former President Donald Trump. He's been vocal, on social media, in interviews, calling for aggressive rate cuts. Why? Because lower rates often mean more growth, cheaper loans, and stronger markets in the short term. And let's be real, heading into an election season, that kind of economic boost would look pretty good. But the Fed didn't budge. And that's what this video is about. Why the Fed is defying Trump, what their decision really means, and how it affects your money. Even if you don't live in the US, because once you understand how central banks think, you'll stop reacting emotionally to headlines, and start seeing the bigger game. Let's start with the basics. What is the Federal Reserve? The Federal Reserve, also called the Fed, is the central bank of the United States. Its job? To keep the economy stable. That means keeping inflation under control, supporting employment, making sure the financial system doesn't collapse. And here's the kicker, it's independent. That means the Fed doesn't take orders from the president, Congress, or anyone in politics. Why is that important? Because if politicians could control interest rates, they'd always choose what's popular, not what's wise. They'd cut rates every election year to boost the economy, even if it wrecks things long term. So, by keeping the Fed independent, it forces monetary policy to be data-driven, not political. This independence is a big deal, and right now, it's being tested. Trump versus the Fed. What's the tension? Donald Trump has never been shy about voicing his economic opinions. During his presidency, and now again as he campaigns for re-election, he's made one thing clear. He wants lower interest rates. Fast. From his perspective, rate cuts stimulate the economy. They make borrowing cheaper, stocks go up, and consumer spending rises. And sure, that looks great on paper, but the Fed doesn't just look at what feels good today. They look at where we're headed next year, and the year after that. They ask questions like, is inflation under control? Are we overheating the economy? Will this decision cause a crash later? And based on their models, their data, and their forecasts, they've decided to hold rates steady, for now. So while Trump shouts, cut the rates, the Fed quietly says, not yet. This isn't personal, it's policy. Why isn't the Fed cutting rates right now? The answer is simple, but not easy, because inflation still isn't fully under control. Even though it's come down from its 2022 highs, prices are still rising faster than the Fed wants. Their goal? Around 2% annual inflation? But we're not quite there yet. Cutting rates too early could undo all the progress. It could send inflation back up. And when that happens, everyday people suffer most, because everything from rent to groceries to gas gets more expensive. So the Fed is playing it safe. They're waiting for more solid signs that inflation is really, truly, consistently coming down. That's why they didn't cut rates on June 18th. And that's why Trump, and many others, are frustrated. But again, the Fed isn't here to please presidents. They're here to protect the economy. How do interest rates even work? Let's break this down. When the Fed raises or lowers interest rates, they're controlling the cost of borrowing. Higher rates equals more expensive loans. Lower rates equals cheaper loans. That affects mortgage rates, credit card interest, business loans, car payments, student debt. But it also affects investment decisions. When rates are high, people are less likely to spend and more likely to save. When rates are low, money flows into the economy faster. So when Trump says, cut the rates, what he's really asking is, make money cheaper so businesses boom, markets rally, and consumers spend. But here's the problem, that kind of short-term gain can cause long-term pain. especially if inflation isn't fully tamed. That's what the Fed is trying to avoid. The inflation versus growth trade-off. This is where things get tricky. There's a constant tug of war between two goals: keeping inflation low, supporting economic growth. But the tools the Fed uses often help one goal while hurting the other. Example: raising rates fights inflation, but it also slows growth. Cutting rates boosts growth, but it can fuel inflation. This is the tightrope the Fed is walking. They're trying to slow the economy just enough to tame inflation, without tipping the country into a recession. And that takes time, patience, and yes, sometimes unpopular decisions. Like not cutting rates when a former president wants you to. What happens if the Fed bows to political pressure? If the Fed caves to politics, it sets a dangerous precedent. Imagine this. Every time an election comes around, the Fed slashes rates to juice the economy. Stock market goes up. Everyone feels richer. But behind the scenes? Debt piles up, inflation returns, bubbles form. And when those bubbles burst, ordinary people pay the price. We've seen this before in history. Short-term political wins often lead to long-term economic disasters. That's why central bank independence is non-negotiable. It protects the economy from short-sighted decisions. And that's why the Fed doesn't answer to Trump or any politician. How do markets react to the Fed's decisions? Wall Street watches the Fed like a hawk. Every speech, every press conference, every hint. Because when the Fed changes course, markets move. If the Fed signals a rate hike, stocks might fall, bond yields rise. If the Fed hints at a rate cut, stocks rally, borrowing costs fall. So when the Fed didn't cut rates on June 18, markets reacted. Some investors were disappointed. Others saw it as a sign of strength, that the Fed is serious about getting inflation under control. And here's the thing. Even if the Fed didn't cut rates today, they're signaling they might do it later this year, if the data supports it. That's what investors are really watching. Not just what the Fed does, but what they're thinking. It's called market signaling, and it matters a lot. The time lag most people forget. One of the most misunderstood parts of monetary policy is this: time lags. When the Fed raises or cuts rates, the effects don't show up right away. It takes months, sometimes over a year, for those decisions to ripple through the economy. So when the Fed says, we're holding rates steady, they're not just thinking about June 2024. They're thinking about next year, and the year after. They know today's choices shape tomorrow's outcomes. That's why they often move slower than people want. Because rushing a rate cut could undo months of progress. And once inflation comes back, it's much harder to bring it down a second time. So, who's right, Trump or the Fed? Honestly, that's the wrong question. It's not about who's right. It's about what you value more. Do you want short-term boosts to growth, knowing it could bring inflation? Or do you want long-term stability, even if it feels like things are moving slowly? Trump wants speed. The Fed wants stability. And as frustrating as that may be, there's wisdom in going slow, especially when the economy is still healing from massive inflation, supply chain issues, and global instability. The truth is, the Fed's job is not to please presidents. It's to preserve purchasing power. To protect the middle class. To keep the system from overheating or crashing. That takes guts. That takes independence. And whether you agree with the Fed or not, you should be glad they're not just doing what's politically convenient. What this means for you. Even if you don't live in the US, the Fed's decisions matter. Why? Because the US dollar is the world's reserve currency. What happens in America's financial system affects the entire global economy. A stronger dollar affects imports, exports, and emerging markets. US interest rates affect global bond markets. Fed policies influence the behavior of central banks in Canada, the UK, Australia, and Europe. So yes, when the Fed defies Trump, it's not just a political drama. It's a global signal. And if you're an investor, a saver, a business owner, or just someone trying to build wealth, this stuff matters. Understanding how interest rates work, how inflation is controlled, and why independence matters, these aren't just academic ideas. They're financial survival tools. Final thought. The headlines might make it sound like a political feud. Trump versus the Fed. But the real story is much deeper. It's about how a healthy economy is built. Not on fast wins, but on solid foundations. Not on pressure, but on principles. So the next time you hear someone say, the Fed should just cut rates already, ask yourself, what's the cost of doing it too soon? And more importantly, are you building your financial life on short-term hype or long-term understanding? Because money doesn't just grow with good news. It grows with good decisions, even the unpopular ones. If this helped you, consider subscribing to Alpha Finance for more information.